for bringing that up, Matt. So, and it's a powerful strategy because you have a third party entity. So you have another Social Security, another federal tax ID number that owns that policy. So it takes that out of your estate. So if you have a property that's worth $1 million, you have a 401k worth $1 million, you're already over that threshold. So if you take that, if you add another policy to that, which happens a lot, right? I'm sure, Matt, you can attest to that.
Absolutely.
So if folks don't know that, sadly, if they have a $3 million policy, now they're worth $5 million in the eyes of the state, that's tax, the federal tax, whatever the case is. But if you have the ILIT and or the life insurance, the Irrevocable Life Insurance Trust, you put the policy inside that trust, and then the beneficiaries get the money or proceeds from that.
Is
So
that also protected then if you go to like a nursing home or what have you?
timing depending, yeah.
Right.
Right.
And it's also going to pass on creditor protection to the beneficiaries, right? So because it's in an irrevocable trust, the beneficiaries, typically we're going to include things like spendthrift provisions so that if the beneficiaries are subject to divorce proceedings, or if they get into a car accident and it exceeds the available insurance to cover that accident, there's going to be debtor-creditor protection that's built into that. So that money, you can be assured, is going to go to your beneficiaries.
So interesting.
And that's just the tip of the iceberg, right? I mean, that could be heavy depending on the audience and whoever's gonna listen to this stuff. But I would say that you don't have to. One of the biggest preconceived notions is that you have to be worth $10 million to talk to Matt or talk to myself or talk to people in our professions, and that's just not true. So I work with everything from teachers to janitors to CEOs to everything in between, and it's one of the best ways to create wealth is to have life insurance. It's the only vehicle on God's green earth that is tax-free at death. So it's estate tax-free. It's not ordinary. It's ordinary income tax-free, but depending on how you structure it, based on our prior conversation, then it could also be estate tax-free. But it has to be designed correctly.